This was my response to the member that really kind of instigated this whole thing. And Mike, I just wanted to remind you, okay, I'm not going to respond to any other future thing like this because I'm spending way too much time on you. And I'm not going to let you hijack the mentorship, and you're not going to hijack my attention. So I'm only doing this because a lot of people follow me on Twitter, and I don't want anything taken out of context there and not left answered with the right amount of evidence. And I think I've done that for you here. So we have a fair value gap here on the dollar CAD. Now think about what I said relative to the interest rate market. What was the interest rate differential between the two currencies here? Okay, we have Bank of Canada, 1 3/4. Federal Reserve, the U.S. market is 2 1/4. Where the market participants wanting more likely to put their money? Where are they going to get the better yield? They're going to buy dollars and sell loonies. So they don't want the Canadian dollar. They're going to sell Canadian dollar and buy dollars because the differential is 50% better by buying dollars versus the Canadian dollar. So from a fundamental standpoint, if we take that information and transfer that into a currency pair, it's dollar CAD. So if we are stronger dollar, weaker Canadian relative to the differential, and again, this is a long-term macro view. If we can couple that with short-term technicals, then we have a nice bullish bias. But you still can trade short in that environment. And I did it for you here. Right there. Now, I said, I'm going to go to a daily chart just for a moment. All right. I told you all in the video, and I'm going to do this right now, live again in the recording. Live in the recording. How about that? This down close candle right here, I put my line right on, that's low. Okay, so what's the low? 132.61 and 4 pipettes. All right, it's that. 132.61 and 4 pipettes. Okay, there's your black line. That's the level I said, watch this level here. All right, so that's our key higher time frame level. If we drop down into an hourly chart and zoom out a little bit. All right, so here's your price run here. It runs up and hits it the first time here on the 2nd of August. Okay, I said at the time, I said it looks kind of heavy, and we'll see what happens. Now, I'm looking at a pair that a member had asked me what my personal opinion was at the moment ahead of that recording on the 3rd of August. What was my opinion of it? It looked heavy. Now, that analysis was contrary to the long-term macro analysis that I just outlined for you here. It does not matter because I took no trade there. There's nothing on this pair. Just because it hit that level, it has to do something for me. It has to create an opportunity where it's obvious, it's clean, it shows a willingness to run it. This right here, this little hit right here, it's too shallow. That's a daily level. I want to see them really work that level. Well, we get it here, and it breaks down below it. We get a punch above it here, and we try to trade lower, fill in the fair value gap, and then we pump it up one more time. I did not see this trade. Okay, I did not see this trade until we saw the rejection occur already in this fair value gap that's on a lower time frame, which I'll drop back down in. But my analysis concepts kicked in because of the buy side liquidity pool here. We ran above that fair value gap, and then I felt confident that we'd run this level here, even though it's against the long-term macro analysis. I'm not limited by that. I tell you all in the core content to utilize the long-term to build the confidence. You'll get to be able to do these types of moves, and I'll drop down to the lower time frame again. You'll get there. I didn't see it here. I saw it when we got down into the breaker here as it was trading into it live. Watch what happens when we go into a 5-minute chart. Zoom in. One more time. Can't go any more than that. This candle here, okay, it had opened it was trading back up into the breaker. Mean threshold of the bearish breaker. As it traded there, that's exactly when I entered. Breaker. Liquidity pool, liquidity pool, liquidity pool, liquidity pool, liquidity pool, rejection block. Right here, lowest down close. And every relative equal low, relative equal low, relative equal low. Every point at which I exited and took partials was relative to these price points. Here, so I was pairing liquidity. Sellers, okay, I'm buying back some of my short that I put in here. I bought some back below the Asian range. I bought some back below the liquidity pool. I bought some back below the liquidity pool. I bought more below the rejection block. I don't care about that last little bit, even though I had this level and this level and this level as a potential level it could reach down to. I want to be getting out in the movement that was favorable for me. I don't always get the actual low of the day. I don't care to know that. Well, I shouldn't say it like that. I do care to know it. And how do we know it? We have a low here of 131.95. Okay, 131.95. What's 10 pips below that? 31.85, right? No, I'm not going to be able to pull it up on that because it's a 5-minute chart. Well, 31.83.7 was the level that the standard deviations for intraday volatility called for. So basically, it went, what, 11, 12 pips almost below that low. And you blend those things together. Where's my 15-minute time frame? You blend those things together, okay, to forecast a move. I want to get out before that. So I'm getting out before it runs down there because I may not get that exit. The broker may not let me get filled. It may not trade down there for my limit order. It may not get that far in my brokerage account. So I want to be getting out at that low-hanging fruit objective, rejection block. Look, man, if this doesn't give you, here's a 1-minute chart. This is one of the things I do like about MT5 is that on MT4, you can manipulate the things and make it look like you did a trade and you didn't really. You can't really do that I can tell with MT5. And you watch me do the video, I recorded the whole thing, kept showing you the time, pop it up in here like this and showing you as it was doing everything. And I immediately made the video as soon as I put some music over top of it and put it on Twitter. There's no way anyone can do Photoshop, okay, all this stuff, okay, that quick and then throw it on Twitter, which is, again, time-stamped. So everything in here, everything, even on a 1-minute chart, you can see the fair value gap in here that closes, trace right up into that mean threshold, the bearish breaker, sell it. Let me zoom in here. Again, I really want you to appreciate this. Look at the high of the candle. Like this is painted by MT5. Immediately as soon as you get in, it puts a little red arrow in if you're going short, and a blue arrow when you buy, if you're long, or if you take partials. I bought something out here, 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 and then finally down here, below the rejection block. It trades down a little bit more, not by much, but then look where we're at now. Well, it's better if I show you in a 15-minute time frame. Then the fundamentals kick back in. Down here, when I covered my short, boom, rallied up. What's it doing? Buy-side liquidity pool, and we have another buy-side liquidity pool that is yet to be cleared out, but I think that's going to be the next one that we reach for. But relative equal highs. So everything in here is taught in the core content. I didn't see this set up. I'm doing 1,000 things all day long. I'm being myself, not just ICT too. I mean, I want to have time with my kids. They're out of school. I'm doing all those things. I'm jamming that inside of a 24-hour block of time. And it pisses me off, frankly, when I see people in the forum say, I shouldn't be on Twitter. I should be spending more time in the videos teaching and explaining things in videos. I have done thousands of hours of videos. Okay. I want you to stop posting things in my forum saying I should spend more time making videos, and you should be more time spending in studying my videos, because none of you have mastered it. Everything that I've taught, none of you have mastered that. So when one of you can come forward and say you've mastered that, that's the person that can run his mouth and say, or her mouth, and say that I need to be spending more time, because I have given you 1,000 hours worth of things, and none of you have mastered that yet. So please, remember whose house this is. You're guests here. Even though you've paid